Well, we have some more good news for millions of Americans because according to the IRS, your tax refund for this year is likely going to be over $1,000 larger, meaning the average $3,000 tax refund isn't a thing. You're going to get closer to $4,100 for the average person. Now, that right there is substantial. That right there, an extra $1,000, all because the one big beautiful bill. This is going to help out millions and millions of families. Now, I want to explain why this is happening, what is going to happen moving forward, and what the IRS says you need to watch for. I'm also going to show you the new IRS tax brackets for 2026. Again, these are some major changes. We're also going to address the IRS. They did release some guidance for tips and overtime workers. So if that is you, you need to watch this video right here. But if you are excited about an additional $1,000 for 2026, go ahead, hit that like button, and now let's begin. Look at this right here. It says your tax refund could be $1,000 higher in 2026. Here's why. I want to read a little bit of this to you. It says right here, federal tax refunds often represent a family's single largest check of the year, and next year's refunds could be even bigger, with the average payment set to increase by $1,000 per filer. $1,000 per filer. This is huge. Now, again, $1,000 isn't going to change your life forever. You're not going to be able to retire off this, but for many people, $1,000 is a decent chunk of change. Here's the problem, though. The average person that's going to be receiving this is likely going to be making over $60,000. Okay? So if your family's making over $60,000 per year, this will likely be you. If you're making $25,000, you're making under $40,000, you're not going to receive the bulk of this. And that's part of the problem. And this is what many lawmakers have been saying is, we understand that the one big beautiful bill was a massive bill for taxes and reducing the tax burden on the American people. But for the lowest income earners, it didn't do a lot. Okay? I want to show you something. It says right here, this could boost the typical refund check to roughly $4,151 per filer. Last year, it was $3,151 for the 2025 tax filing season. Now, here's something that you need to know, okay? Look at this right here. It says, Americans generally aren't adjusting their withholding to reflect the new law's retroactive tax cuts, largely because it's hard for employees to estimate the impact. As a result, when people file their taxes in early 2026, their refunds could be about 1/3 larger than usual, simply because we didn't go back in and adjust our W-2s, right? I think that's what it is, or W-4 or whatever. Right? We don't go back in and adjust it as soon as some legislation passes. That's the reason why they say, even though what you got last year is still correct, what you didn't adjust for after the one big beautiful bill, that's the reason for this additional refund. I want to show you something though. Look at this right here. It says it could be one of the largest tax refund seasons ever. Still, the impact won't be evenly distributed, with the benefits largely going toward middle and upper middle income households, or those earning between $60,000 and $400,000 per year. It says that echoes earlier tax analysis projecting that higher income Americans are likely to see a bigger relative boost from the new tax law compared with lower income households. People who earn over $217,000 a year are likely to get $6 of every $10 in new tax breaks from the law. One of the big ones is this right here, the SALT tax deduction. So some of the law's benefits won't reach the highest earning households because the income phase outs. For example, the new $40,000 SALT deduction begins to phase out for filers with annual income of more than $500,000. Okay, so yes, according to the IRS, they are stating that this year we are going to see potentially the largest, the largest refund season ever. This means more money is going to go back to the American people instead of sticking in and staying at the IRS. Now, here's another one. Look at this right here. It says IRS releases guidance for Trump's tips and overtime deductions. I want to read a little bit of this to you. Okay? It says right here, the guidance released last week covers how to report these deductions on tax returns, but workers could still face questions at tax time. One thing that you need to do, if you are able to differentiate between your income and your actual income, your wages, hourly wages versus your tips, and then your overtime income. Overtime, it's very easy on a W-2, but when you are trying to figure out your tips, this is a big one. You really need to separate the two. And if you're going to file your own taxes, and I wish I was a tax expert, I'm not, but go meet with a tax professional as soon as you get all your tax documents. Go meet with a professional because they will be able to guide you in the right direction as to how to do it correctly. Again, you don't want to have to pay taxes on your tips. I want to keep reading this. It says, the tip provision allows certain workers to deduct up to $25,000 in qualified tips from 2025 through 2028. The tax break phases out once modified adjusted gross income exceeds $150,000 or $300,000 for married couples filing jointly. It says, meanwhile, Trump's tax break for eligible overtime pay offers a deduction of up to $12,500 for single filers and $25,000 for joint filers. Goes on to say, workers can deduct their tips or overtime pay if those earnings are reported via so-called information returns, such as a W-2 or a 1099. It says while the IRS strongly is encouraging employees to provide this reporting, it is not required for tax year 2025. So again, this year, they're not requiring the reporting from the employers. Okay, and that could go in your favor. But again, talk to a professional, and they will put you on the right path so that you are not getting screwed over. All right. So, want to leave you with that one, but I also want to show you this as well. Okay, the IRS announces the new federal income tax brackets for 2026. I want to actually read these to you, or actually show them to you. Okay, you can go ahead and pause the video if you need to so you can see what it looks like. But this is the married filing jointly. This is for tax year 2026. You can see it goes up to $24,800, and that would be 10%. And then it would be 10% of $24,800, and then from $24,801 to $100,800, it's plus 12%. So you can see where it is, right? The 12%, 22, 24, 32, 35, and max out at 37%. Okay, that's married filing jointly. Right here is single filers. All right, you can see it again. The numbers, okay, they're still decent, right? And so it doesn't matter. And go ahead, pause the video. You can save this if you need to. But just understand right now, okay, the Trump administration would love to do away with the federal income tax. But in order to do away with the federal income tax, the United States has to either reduce our expenses, which is proving to be very difficult, or we need to increase other revenue, for instance, tariff revenue. If we can do one of those things, well, technically, we need to do both of those things. If we can do that, we could eliminate or reduce our federal tax burden at the end of the year. So we'll see what happens, but that is what we know as of right now. The IRS does state your tax refund for 2026, well, in 2026, but for calendar year 2025, could be $1,000 larger as a result of President Trump's one big, beautiful bill. So, if you have any questions regarding any of this stuff, please ask your questions down in the comment section below. But again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.